Hey, Steve Saretsky here. I put together a quick video, just another blog post on my website. You can check the link out in the description below. It's on total capital fleeing the Vancouver real estate market. So there's really a couple things to understand here. Is you have the average price and the median and the MLS benchmark. So the sad and unfortunate news is the media picks up what the real estate board puts out, and what the board puts out is the MLS benchmark, which I've talked about before can lag as much as up to 6 months. So it's really not very accurate. And if you're looking for real-time data, this market changes so quickly. You would never look at someone that was trading stocks or bonds or anything of that in the financial markets looking at something that is 6 months delayed. They want real-time data. I don't know why the real estate board, no, I can tell you why they don't decide to put it out, but anyways, that's another story. So they don't put that out. So, but the thing is, what you can look at is the average and the median. So yes, the argument is the average can fluctuate too much on a month-to-month basis. It can fluctuate based on the inventory that's sold. You can have basically one $10 million house skewing the overall average. And sort of a similar thing to median. I think that median is much more accurate. It basically has the highs and the lows, and it takes that one median price. I find that pretty accurate, and it is real-time data. But what you can look at the average and a little bit in the median as well is basically, more particularly the average, is it shows the total capital that's being invested into Vancouver real estate, and that's the real key here. Total capital flowing through the market is determined by average price. So if your average price is way down, you have to say, okay, well, obviously there's not as much money being pumped into the market. So it's something to look at, because it's going to tell you exactly what the market is doing. So just to give you an example of really a huge fundamental flaw. So we're going to look at the area of the Real Estate Board of Greater Vancouver, which is all the areas the board covers, basically in parts of the Lower Mainland. The average from October 2015 to October 2016, gains have pretty much been wiped out. So the average is only up 2.5% for the detached market. Median is up 5%. So for a full year, average prices are only up 2.5% for detached, and they're only up 5% for median. Okay, now if you go and look at the Real Estate Board's benchmark, their benchmark has prices up 29%. So 2.5, 5, 29% for the benchmark. So obviously there's a huge discrepancy here. It just doesn't make any sense. Just to put that into perspective of how little these gains are, basically all the price gains have been washed out over the last 6 months for the detached market, but nobody really knows because the only thing that gets put out is the benchmark. So just in comparison, from October 2014 to October 2015, the average price was up 25% in the detached market. So 25%, and again, obviously that hasn't changed. It's 25% from 2014 to 2015. The median showed 30%. So the Real Estate Board of Greater Vancouver's detached price was up 30% in the median. That was 2014 to 2015. Again, this year, the average is 2.5%, the median is 5%. I think that kind of tells it all right there. And again, the Real Estate Board's benchmark right now is telling you prices are up 29% year over year. It's dropping slowly, but it's so slow that nobody notices what's going on. So there's a huge outflow of capital. You can say, okay, well, yeah, maybe the price of your homes aren't selling, but the fact of the matter is that the capital is not there. It's not flowing through the market. And that's a really good indicator of what is happening in the current state of the market. Just to give you another example, I've talked about Richmond a lot, particularly just because I grew up there, and it's a market that has changed significantly. It's been heavily impacted by foreign money, foreign capital. Prices went up 80% over the last 3 years. Obviously, it had the highest concentration of foreign buyers. And it's also seeing arguably probably the biggest correction of any of the markets right now. And so that just basically tells you the outflow from maybe China is going into other areas. Richmond, if you combine all the areas, so I'm not just talking detached, but if you take the detached, the apartment, and the townhouse market, and you combine them all, your average price has now dropped 12% year over year. So from October 2015 to October 2016, the average has dropped 12%. Yes, majority of that is in the detached market coming down, but if you're combining them all and you're looking at the total capital that's sloshing around in the market, it's down significantly. And I think the biggest thing is to look at, you have the average and the median, two very real-time price indicators telling you that prices have dropped significantly. I mean, at one point they were up close to 30%. Now they're only up 5% year over year. And your benchmark is still telling you 29%. So there's a huge flaw in putting out the benchmark. Again, it is quite concerning. I think it's rather kind of sad, because again, that's what the board puts out. That's what people rely on when making their real estate investment decisions, whether that's buying or selling a home. They pick up the newspaper, they look at the numbers, the stats, and it's giving you a benchmark that is delayed by, again, I've talked about it, 6 months. It's telling you prices are up 29% in the detached market. Just give you another example. It said prices in East Vancouver detached homes hit their peak in September. The average and median shows you that was back in like April or May. So there's just a huge lag. I mean, we've looked at, everybody can go and look and see the price reductions that are happening in East Vancouver. I think last month in October there was only 66 sales. It was the fewest of any October over the last 10 years, including 2008. So the market is just completely tanked. It's prices are down roughly about close to 15%. I think actually most realtors will probably admit that to you as well. And but then you have the benchmark coming out that October was the first month that it actually, prices had moved, and it's just I think it was like 1% they had it at. So totally important to look at the average and the median. It shows the total money flowing through the market. It's real-time data. Yes, it's hard to interpret on a month-to-month basis. Look at the trend, it's there. The corrections are totally happening. If you're looking at the benchmark, again, you're not looking at real-time data. So anyways, hope that helped.